Good morning, good evening, good afternoon, traders around the world. This is Phil V at Trading Capital Markets, and today we are the 23rd of May 2025, and it's currently 9:27 a.m. So let's start this trading session. Currently, 40 points on side. Over here, there was this little market structure shift that I used. Oops, let's put it back and adjust it again. Right here. Right here. There you go. So this after this market structure shift, I entered around over here. Hey, yeah, already in. The market offered me the opportunity to get in right after this market structure shift. I was going for this, but I couldn't get the order in on time, so I went that market a little bit lower. Trump. Trump is making the market move, which I don't mind, but this was the short that I was hoping to get after this big period of consolidation at these highs there. Didn't get it. That's fine. We'll continue. Market open in 1 minute. He wants tariffs on the EU because they're not playing uh, they're playing a hardball, hardball game with Trump, and he doesn't like that. So, by my calculations, Trump has the big end of the stick, not Europe. But they'll find out soon enough. So this is going to be the first area of interest. Okay, 10 seconds till market open. Where's market open? Dipped into that fair value gap. Let's see if it starts running above it. I think it's an easy buy over here because knowing Trump, he's going to want to settle those tariffs really quickly and it's going to bounce back. And I think everybody knows this, and it's the same game plan in their head. They're going to be start buying the open because it's a it's a pretty huge gap. Let's see. Mm, That was a good opportunity to buy again in this little fair value gap, but let's see what the market has to offer. I really think that it's going to rip today. Come back at least to here, 951. And look, if I'm wrong, then it's all right. But I'm currently 50 points in profit. Made a new high right here. So I'm going to place my sell stop right here. Nasdaq doesn't manipulate as much as, for example, Euro USD. Oh, I don't know. I don't really look Euro USD, but I'll take your word for it. Let's see. Over here, can we pop those highs? Constantly, it's taking those lows to go higher. Okay. Yeah, manipulation. Opa, let's see. I wanted to see it close within this fair value gap, this bearish fair value gap. Just a little higher. All right, 60 points left to take profit. Can we do it? I think we can. I think we could definitely do it this morning. There we go. Off we go. Yeah, everybody's of the same opinion, I think. Like Trump is saying tariffs on Europe, but he's going to want to settle those tariffs quickly because at the end of the day, it's going to cost him money, right? If Apple is not making money or Europe is not trading with them. Come on, 36 more points left. Uh, a little bit, a little bit. I've studied a little bit of fundamental trading. I even have a book right here. If you guys want to read it, it's very interesting. It's called The Secrets of Economic Indicators by Bernard Baumol. Here you guys go. You know what? I don't think I'll be a dick for like 20 points. Unless, wait, let's see. Come on, keep on pushing. Obviously stops to break even right now. Even these lows. But I really want to see that fair value get tapped into. Right here, this first one. There you go. Take profit hit. So we had that shift in market structure right here. Bought it over here. And got out at uh, 951. So that right there, everyone, is 791 to 951, 10, 160 points. I would love to take it on the on the E mini, but I got it on the micros because I had to reduce my risk given the losses that I was getting this week. Ah, but yeah, that's it. That's it for today's trading session. Short and sweet, guys. I know it wasn't long, Roger, but it's Friday. It's Friday. We could still analyze a little bit more, but 7 minutes right after market open. This is typically how you want your trading day to be. Fast. Were you watching it? Were you watching this? But I don't trust it. Yeah, I mean, yeah, I know. I understand you. Me too, because I've been getting burned every day. But the thing is that, okay, so this is it. It's not a thing of trust. It's a thing of your ego not wanting to get hurt again. And once you understand that your ego does not want to get hurt again, you'll understand that an opportunity is an opportunity regardless of what your ego thinks, right? So for me too, I really did not want to trade this morning, but I saw this opportunity and I said, okay, let's give it the benefits of the doubt. Mm-hmm. Mm-hmm. But if you trust market structure, then you're good. Because so far, market structure has not failed me once this week, by the way. I failed myself multiple times. So over here, let's see. This I closed it. Yeah, exactly. So over here, you see this? When this came back over here, I closed it at break even after you left because I was stuck in the chop. But this was a target, right? And this was a stop. So these highs was a target. That was a stop. This was the market structure that we were respecting. The stop was below this. Guess where it went? Guess exactly where it went. To take these little highs on the right. And then fell exactly from there all the way down. Now look at this. Exactly on my fair value gap. Boop. At the highs. So I mean, I trade with market structure and I found that it's the best way to trade so far for me personally in the way that I trade. So after a market structure shift, enter on fair value gaps that are within that leg and just put it at the low of that leg. So like right here, you see when we shift. So you always have to like believe in the shift. Okay. So over here, what do you mean by market structure continuations? Like you have to believe in the that it'll continue going up if right after breaking the market structure. Well, there's a let's see what you answer to that. Market structure continuations. A retracement inside a trend. Okay, so this is the thing. All right, let me show you. Let me show you like that. Mm, let's take how many points? Yeah, I think it's like how many points? Tuk, 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 tuk. Price range 791. Anyways, all the way to here. 160 points about. Pretty good. Sorry, I got distracted. Let's go back to the NQ because I marked the NQ the most. Okay, and I'll tell you why I trust these market structure shifts. Okay, because these market structure shifts arrive at a moment where smaller time frames align with bigger time frames. So right now, if you go back to the 4 hour, you're going to see that it was dipping into this 4 hour fair value gap. So I know that there was a possibility at this point that it was going to start to shift. And if it offers you a shift in market structure right after bouncing on a 4 hour fair value gap, I mean, you'd be a fool not to take it. Not only that, we had this this bearish fair value gap over here, okay, that hadn't been come back down into, which is a inversion, right? When you come back into it, it becomes inversion. So we had a 4 hour fair value gap paired with a inversion consequent encroachment. Yeah. So 4 hour fair value gap paired with inversion consequent encroachment. For me, it was like a double whammy. So I bought around where the consequent encroachment was. Let me go on the MNQ. Let's see. MNQ, 4 hour. I've noticed that on the MNQ, it's like sometimes it's not the same, but most of the time it is. So here's the inversion, fair value gap, right here. My buy was at the consequent encroachment of the inversion when I was seeing it on the NQ on my other chart, and then the sell 160 points higher in that uh, fair value gap. So yes, you can have a continuation of this main trend down, but once it offers you this to go counter trend, to go reach internal range liquidity, like within these fair value gaps to continue lower, I mean, usually it's a good sign. It's healthy sign for the market to do a retracement, because what was the scare that it continues going straight down even more than let's see. How many points is this? Okay. 500 points. Really? On a Friday, minus 2.36% down, with a little comment with that's going to be settled very soon, knowing Trump. Trump's all about the deal. Remember that. So he makes some news and settles it very swiftly after. Doesn't leave anything like hanging for too long. Exactly like the tariffs. Imagine the China tariffs. Did you actually think that's going to last for more than 6 months? No, there's no way. So people were stacking orders. But yeah, really interesting book if ever you want to read it, Roger. The Secret of Economic Indicators by Bernard Baumol, the third edition. It tells you all about the economic indicators that we see, the red folder news events and everything like that. It tells you why it's important, how it affects the dollar, how it affects the rest of the markets, and what measures within those reports are important. Would you like me to type the name in the chat? There you go, Bernard. Let me add the name of the author, Bomo, and it's the third edition. And for example, in the discount area of that retracement, do you consider trading? Like when it comes, okay, so when it comes back within this price leg, so let's say this price leg that make the new high, and we come back to, let's say, the optimal trade entry, right? So around the 61.8% retracement. You mean like going long again? Typically, no. After reaching the first target and having such a reaction off of it, like it, like so this is the interesting part. If you think, and this is all like how do you say, it's speculation. It's what we do, right? So if you think that the market is going to stop at the, here, let me put it in front of you guys, the 4 hour inversion, like the top of that 4 hour fair value gap, and come and take these highs after. Because when you think about it, okay, we had this down move, right? Which was much faster than this up move. So this, we did it in this down move over here, happened in 48 bars. Okay, so 12 days. Okay, and after that we had this up move, sorry, that happened from here. Oops. So this is how I do my thinking. Okay, and then we have the up bar that happened in almost, no, twice and even more the amount of days, so 35 days. Okay, so right here, this price I don't think will be revisited too. I think this was the expansion above, consolidation of this swift price action to the upside on the 4 hour chart, and then it's coming to rebalance this expansion after distributing, right? So this is doing the so after expanding, distributing, and this is the manipulation, right? Manipulation below these lows, right into this far fair value gap. Now we're doing the distribution part. If you think that we're going higher to come get these equal highs up top, right? I don't see why, unless there's more bad news with the economy or headlines, I don't see why it would come back lower than this point over here. Okay. So for me, I think that it would be the spot to be buying again. So it always depends on what you think the long-term action of the market is going to be, right? So now we have like this, we'll take it off. We'll go to the other chart. It didn't hit, it did not hit the 61.8% retracement yet. The only thing that I don't like is that these lows are a bit too close to one another. Okay, that's the only thing I don't like about this trade, if you were to reaccumulate over here. But now the other thing that I do like about this trade is that these candle bodies were not closing below this 1 minute fair value gap. So it's a balancing act, right? And also from this range to this range, it's stopping at the equilibrium. So I think it's showing a willingness to build above equilibrium and expand this on a second leg. So let's say from here to here, I'll do the inverse of this leg. So from here to here, like that, you see the expansion and where it's going to expand to. So from here to here, we have the 1618. This is where it would expand to. Yeah. Let's see. Today's first presented fair value gap was we're at, that's micros. Let me go on E-mini because it's different. So today's first presented fair value gap. That's 932 is this one right here. Interestingly enough, look where the body candles are stopping on the first presented fair value gap. The consequent encroachment. Okay. So now I think we might go see the 618 and possibly these relative equal lows because but let's see. Now I would like to go back to the daily and see what the daily has to offer. Let's close this. So you see how these, even though the I don't know what signature. Okay, today's I don't know what signature is stronger, but I'm pretty sure it's the first presented fair value gap. But right now we are still above the 50% and closing, right? So once again, it's like yesterday's open. Remember, we had that big push at the open, and now we're going to start maybe ranging over here. Because we have same thing, relative equal highs over here and relative equal lows. So you have to adapt quick in these markets. That's why I traded before the open because I saw the past I think 3 days, it was the same thing. Early morning push all the way to like 9:40. After that, it settles until 11:45, 12-ish. Yeah, exactly. Yeah, yep. That's exactly right. Yeah, let's take this off. Like that we have. Like that we have no obstruction. There you go. Look at that. Here, 13:30, around 13:15. So not 13:30. It's usually 13:10 to 13:15. So macro times, remember? Have you ever learned about macro times? Yeah, ICT macro times start at 13:10 to 13:15. Boom, right here. So 13:10 starts and gets what? Liquidity resting above these highs. Because what did it do? So right after, wow, I'm going off today. So let's see. Let me explain to you why I did this. And let's do this. Over here. Bop, 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 bop. Let's take the inner box. Clear the chart out a bit, okay? So yesterday it respected the Tuesdays, I think. Tuesdays? Is it Tuesdays? Yeah, Tuesdays first presented or Wednesdays? Wednesdays first presented fair value gap. Okay. Let me see. Okay, so after a big down day, all right, like on Wednesday, after a big down day, what happens is consolidation, right? So this is all consolidation. Like, look at this. Manipulation, manipulation, and everything in between this box that started below this move, so this move below this is consolidation. And those days are called search and destroy. Okay, that's how ICT calls them, and I'll show you why. Okay, so search and destroy days. We search for the liquidity low, took it. After that, we went liquidity high. Yeah, or yeah, seek and destroy, search and destroy. It's both the same thing. Seek and search is like, I think it's the same term, but just a different word. Is it seek and destroy or search and destroy? Anyways, doesn't matter. So after seeking liquidity low, we took liquidity highs. So the 7 a.m. highs, right? So the starting of the a.m. session, we took the highs. And after taking the highs, we went to the Wednesday first presented fair value gap. And look at this. This is why it's called seek and destroy. Oops. Here, liquidity was taken. Okay. But while we're staying within this price leg, this bullish price leg, after that, look at this. This liquidity was taken by one tick. Where did we go after that? Get the people that were long it and that dragged their stop loss to this. That thought it was going to pass. Took those out. Then comes back, take these highs out. Then where does it go? Comes back, take these lows out. So it's seeking and destroying each side of the marketplace. Okay. After that, check this out. Before coming to these relative equal highs, what does it do? It comes, makes a relative equal high. Guess which low it destroys? This one right here. It seeks it, then comes and gets the other ones. The Euro USD. Let's go see. Euro USD on futures. Tuk, tuk. And let's go on the 15-minute. Do you trade Euro USD on futures or you're trading it on the It's actually not that bad. The Euro USD. On FDM, okay, that's why. You're going to be able to see the minute chart a little bit more clear than over here. There's probably not as many gaps in the price. Okay, London session. So here I'll put my little London session indicator like I can see. Here's London. You see? Remember what I said about market structure, Roger? Here, let's do the little market structure exercise that I love to trade market structure because anyways, you'll see. You'll see. So, higher highs created over here, right here. Look at that. We continue market structure to the upside. Okay, no bodies closing below these lows. After that, we come back down. We don't take this low. We create a new high going into London. Guess where we go back down to? This low. We didn't take this low. Create a new high. Isn't that amazing? We went to this swing low over here, created a new high. New high, new high, new high. So right there would have been your take profit. So this is not a swing low. So swing lows so these are equal. It's not a swing low. And it created a new high. This is a swing low. So you really have to read the price as it shows it, right? After that, after taking this, created another swing high. Explain this. What's the difference? Oh, swing high. Oh, very important. Yes, that's a very important concept to understand. Okay, so let me explain to you over here. Wow, you're getting the golden nuggets today. Golden nuggets of information. Let me show you. Nope, it doesn't count as a low. Let me take this off and let me zoom in, okay? swing high and swing low points. Okay, it's very important that you understand this aspect. So a swing high to be like this. Let me no magnet at all. Let me do this. Uh-huh. How can I do this? Bar pattern? Does this work? No. Let me just show you on here. Okay. So over here, we had the market structure continuation above these highs. Over here, came back down to this low, came back down to this high. So you see how this candle creates a lower high on the left and a lower high on the right. Did my screen freeze or just my camera? Okay, so you could understand what I'm saying. Okay, good. So you see over here, this high right here, this is a swing high. The middle candle has a lower high on the left and a lower high on the right. Okay, this is a swing low over here. The middle candle has a higher low and a higher low on the right and on the left. But when we took it from, let's show you. When we took it from here, from this price leg to here, right? This could even be considered as a non-swing high. So let's say over here. And we even continue over here. So why don't we take this high? Well, let's just take this. Is this an equal highs on, because I find this very odd that this is an equal high on futures, and let me go see on day trading Euro USD. Okay, let's go here. And the London session, right? So yeah, those are relative equal highs. But this is a low. While both charts are different. So typically what happens is this. When the two bottom candles, right, are the um, same lows, it's not the swing low that you're going to take. You're going to take the next expansion over. So let's say from here to here. From here to here. Because this is a swing high. 430. Let's see 430. 430 low. 430 low. Yeah, but let me see. From this high right here to this low over here. And then we had from this high to there. I normally wouldn't take this over here, this leg, because maybe it is a swing high. Is one higher than the other? So this one on the right, high 13361, 13361. So they're both the same. So technically, we were still trading within this price leg right here. And it showed no willingness to come back even even close to equilibrium. So you see this for 30 candle as manipulation from these equal lows over here. I just see it as going to get internal range liquidity to continue to move higher. And what's interesting is that the fair value gap here that was formed and that was used as a bullish PD array to continue higher is it's probably at the 0.23 retracement of this leg. So just a little bit lower of the 0.23. As long as it didn't pass the 0.38, the movement remains really bullish, right? So we have it past these highs without going below these lows, going back to equilibrium. So I made new highs, so you know that there's a strong move that's coming, right? In the future, you know that there's a strong move that's coming, as long as you keep on respecting this market structure. Here's your swing low. Here's your new swing high. Here's your swing low, right here. Let's go see. Here's your swing high. So these lows are not considered as a swing low. This low is going to be considered as a swing low. Yeah, I know. Because, okay, so you know when we say relative equals lows and relative equal highs, right? When we say relative equal lows, we see the price. Yeah, so when we say relative equal lows, relative equal highs, it's because usually those relative equal uh, lows are places where liquidity is still resting, right? So it's just normal that we're gonna see these get taken in the future. Okay. So right here we created a swing low, okay, and we created relative equal highs with two candles. It's not a swing high. So it's not like a pivot point where the market starts to turn, right, before getting other liquidity. It's going to continue its move up because it's creating relative equal highs. So let's go from here to this high because that's the high. Let me show you what I mean. So over here, okay, to this swing low. But you see over here, when we were coming back down over here, most people would be shitting their pants, right? They'd be shitting their pants. They're gonna be thinking, oh, we might break this low. But at the end of the day, you got no swing high over here. So therefore, the market goes back up, comes back on this order block over here, and expands higher with a new swing low, a swing high. Okay? Most people would have sold their position over here. But the body's even closed above this body. And this wick, guess where it went? It probably went to the consequent encroachment of this order block, or just below it. You see? Yeah. uh, did you listen to that guy named Paul? Paul something. I don't know what his name was. Paul. He's a trading psychologist. Mm. Let me go find it out for you. Is it David Paul? Yeah, David Paul. This guy right here. David Paul. That is pretty good. I'll put the link in the chat. Yep, the Nasdaq is rising. So you see over here, it stayed above the 50% retracement, and this was the target for the expansion. Wait, it was the 1618 that was around here. Let me show you. I did it on the N. I think I did it on the micro NQ, M and Q. Yeah, here. Target of expansion. Also these highs right here. So yeah, it could have been a good place for a reaccumulation. So we had the 50%. We had this 1 minute that was an inversion that became inversion after we came over it. And yeah, it's probably going to turn around here. But overall, I think the market is thinking exactly like how I was thinking this morning. So I think that Trump is going to try and find a deal fast enough, and people are taking their positions. People are pre-putting their positions ahead of, let's say, possible uh, positive news at in the weekend. So yeah, first presented fair value gap you see is the low of this bullish fair value gap, so it could be a possible entry long again there, but I wouldn't. After trading 160 points, I wouldn't touch it again. So yeah, let's go enjoy our day, Roger. Let's go enjoy the rest of our Friday. Cervezas y tapas, baby. Ah, I think that's gonna be all for me for this trading session. And yeah, hospital week. A family member. Hmm. I'll. What's the condition she has? What does she have? If you don't mind me asking. I have no idea what that is. Let's go search. Let's go search that. A rare and aggressive form of non-Hodgkin's lymphoma that originates in the lymph tissues of the brain, spinal cord, or meninges. Okay. Uh, I don't know. Since January, we were treating it. Okay. I don't know. I'm not a medical professional. Okay. But I have been researching a lot certain diseases and why they form. But if you want, I could tell you what I think about these situations. Actually, I'm just gonna send you a link. I'm gonna send you a link on Instagram, and I'm gonna tell you exactly the time slot. Maybe it would help her. Okay, I'm gonna tell you then over here. Um, search these two. Search these two things. Okay, search these two things. Search this. Search search this. Okay, search this. I know it's gonna sound weird to search these two, so you're gonna have to search this and this. Okay. And when you combine these two together, it gets rid of most tumors. I know it's counterintuitive, but these things are okay. So, what tumors are is usually a place where toxins are stored, right? So, it's like a little envelope that your body creates to contain the main ailment, and those are toxins that form. And those toxins are usually created by parasites. Most people don't know this. Most people don't know this, but those toxins are created by parasites, and the body creates little envelopes to store those toxins in. Um, so yeah, the tumors is a envelope, a little compartment, a place where the body puts the toxins that it's trying to protect you from. And those toxins usually come from parasites. I know it doesn't sound natural, but I'm telling you, if you do your research on this, you'll understand why I'm saying this. Most of the cancers can be cured with anti-parasitical medicine, so fenbendazole and ivermectin combined together. It's worth a shot. It's worth you give it a try, and I mean, your mom's life is worth everything to you. I'm sure about that. Yes, I know, but so lymphoma here is a rare and aggressive form of non-Hodgkin's lymphoma that originates in lymph tissues, brain, and spinal cord, right? And those are the places where parasites are usually. Yes, exactly. But her defenses are starting attacking. You know why? Because the parasites are there. I'm telling you, I promise. I think your mom is gonna feel 1,000 times better if you could get those two medications for her. It's going to be hard trying to find a doctor that wants to give it to her, but when parasites, yes, I promise that you will be happy at the end of this if she takes it. Obviously, you're going to have to consult the doctor to see if she's taking other medication for that. for what she already has and if it affects negatively together. But I there's a lot of cancers and ailments that have been cured just by taking those two drugs to get together combined. So on that note, thank you, Roger, for assisting this live stream. I hope I provided some valuable information. And yeah, I understand. Yes, yes, yes. Because the brain has like a barrier to the toxic things. Yeah, yeah, I know. I know. But you should really look that up. The fenbendazole combined with ivermectin. I really, I really think, I really think that it would help her a lot, a lot. I hope she gets better. I really do. I'll send a little prayer in her. Yeah, exactly. Any parasite inside the body, a really bad infection. I will search about it. You should. You really should search about what I just sent you, and I think you will be more than pleased of the information that you find and the things that it will do to help your mother really recover. And I really think that. And I really think that. But that being said, I'm not a doctor. I do search a lot of things for my personal well-being. I have been on parasite cleanses, cures, me myself, and it helped me through a lot of things in my life, and I think it would help her. Have a great have a great day, Roger. It's gonna help her. Have a great day. And yeah, Nasdaq is going back up. On that note, we did a very good trading session today, pre-market, pre-open. Very happy with the results, and we'll continue this on Monday. I'm grateful to have you around, Roger. You seem like a great person. You too. Bye bye. Have a great Friday.